Welcome to your weekly market recap. This week, markets were pulled in different directions: optimism from strong banks and trade news, but concern over a slowing U.S. job market. Positive headlines encouraged buying, but warning signs made investors cautious. The job market's slowdown raises worries about future spending and profits. Investors face a puzzle focus on the good news or the bad. This tension is what makes markets so fascinating. Headlines like "Stocks surge on trade news" only tell part of the story. Underneath, the Federal Reserve is watching closely, European banks face challenges, and tech giants are making bold moves. All these factors shape the market's direction. Understanding these moving parts helps you make smarter decisions. Today we'll break down the U.S. job numbers, the new China trade deal, the health of major banks, Europe's economic outlook, and the latest from tech giants. We'll also highlight a few surprising trends. Let's dive in and make sense of the week's market crosscurrents. Stay tuned as we connect the dots. Let's get started. The U.S. labor market slowed this week, with fewer jobs created than expected. This signals a potential economic slowdown, making investors nervous. The Federal Reserve now faces a tough choice: keep rates high to fight inflation, or cut them to support jobs. High rates cool inflation but risk slowing the economy further. Investors are betting the Fed may cut rates soon, hoping to boost growth. But inflation is still above target, so the Fed must tread carefully. Every new jobs or inflation report will influence their next move. The market is watching the Fed's every word. The next rate decision could shape the rest of the year. For now, the labor market's weakness is both a warning and an opportunity. Investors are bracing for what comes next. The Fed's balancing act continues. Amid labor worries, other news lifted investor spirits. The US and China reached a limited trade deal, easing years of uncertainty. Sectors like tech and agriculture rallied on hopes for more sales and profits. This optimism spread across the market, reminding us how global events drive stocks. Meanwhile, all major U.S. banks passed tough Federal Reserve stress tests. This shows the banking system is strong and resilient. As a result, banks announced stock buybacks and higher dividends. Good news for investors. The combination of trade progress and bank strength reassured markets. It's a sign the economic foundation remains solid, despite some headwinds. Investors welcomed these positive signals. Confidence returned, at least for now. But as always, the market's mood can shift quickly. Stay alert for what's next. Europe's economy is a mix of challenges and new opportunities. The European Central Bank is keeping rates high to fight stubborn inflation, even as growth slows. Germany, Europe's economic engine, is showing signs of weakness, with consumers spending less. This slowdown could ripple across the continent. Meanwhile, the UK struck a new trade deal with the US, boosting British companies in finance, autos, and food. The London stock market responded positively. The contrast is clear. The Eurozone faces headwinds, while the UK finds fresh opportunities post-Brexit. For investors, Europe isn't one story. Each country's outlook is unique. The ECB's tough stance may slow growth, but new trade deals can open doors elsewhere. Understanding these differences is key to smart investing. Europe's fortunes are diverging. Watch closely for new risks and rewards. The landscape is shifting. Let's check in on the tech giants and some unusual market trends. Apple's stock jumped after a big investment in augmented reality, betting on the next wave after smartphones. Microsoft's cloud business keeps booming, securing its future. Amazon faced worries over costly investments in warehouses and electric vehicles, pressuring short-term profits. Meanwhile, Nintendo challenged Amazon over counterfeit games, highlighting the challenges of online marketplaces. Beyond tech, the gold-platinum ratio hit a multi-year high, signaling investor caution as gold outpaces platinum. In the energy sector, hedge funds sold off energy stocks despite stable oil prices, possibly a sign of concern about future demand. These mixed signals show how complex and interconnected markets are. Every week brings new surprises and lessons. Stay curious and keep learning. The market story is always evolving. Thanks for joining us for this week's recap. See you next time.